right, hello everyone. Welcome back to Market Talk Monday with Isaiah Porter and the gang at Foundations Investment Advisors. It's been a little while. We took a Christmas break,
Yep.
and even though the markets stayed open, we took a break. And the Monday we were to come back, which was last Monday, and do our first market talk, the whole doggone office called out sick.
Yep, I was sick. The stomach bug going around.
Yeah, so it was pretty brutal. Hit the kids, the grandkids. Everybody was
Out for the count.
feeling it. So we are back for our first official 2026
Market
weekly commentary with Isaiah. There's a lot to unpack. A lot has happened
talk. Oh, yeah.
since last year.
Yeah.
And we now have control of Venezuelan oil.
Yep.
There's rumors in the market that things in the Mideast could be
Popping off.
popping off, so unraveling.
The U.S. is starting 2026 strong.
It's a pretty
What is
wild
it they
time.
say? Peace through strength, I guess. That's what
Peace
they
through
say.
strength. That was Reagan era. So Trump is a big Reagan fan, so he's emulating a lot of that Reagan era mindset. So
Not only are we a lot of geopolitical things going on, there's a lot of home things going on, like Fed Chairman Powell
yeah,
renovating his office for, what was it, 230 million? 250 million?
It was a big number. I had the note on that here. $2.5 billion renovation of the Fed Reserve's Washington headquarters.
Oof.
$2.5 billion. Can you imagine just renovating?
What are you getting for 2.5 billion on that renovation?
I want to see this renovation.
It had to too. It must be
For real.
top tier.
Yeah, so the DOJ has taken action that stems from a criminal probe of Powell's congressional testimony back in 2025. And, some are saying, bless you,
Thank you.
some are saying that, this is just retribution from the Trump administration
Trying to get him out.
and, Powell not cooperating with lowering rates. Whatever the reason may be, for me, I know the Fed Reserve headquarters is supposed to be one of our shining economic symbols, but a $2.5 billion renovation. I'm scratching my head on
That's
that
pretty
one.
intense.
So, yeah. So at any rate, we'll try not to politicize our commentary, but that does kind of stick out like a sore thumb. And with that, the markets have pulled back a little bit. The market's a little afraid of, well, wait a minute, our government's now politicizing our financial market. So I could see where that would make investors a little nervous.
Mm-hmm.
So what's the opinion through Foundations? What do we see going on?
Yeah. Well,
how's this affecting our clients?
Yeah. So what I like to say first is for our portfolios, I can pull them up for you. So I hit a couple of the big ones that we use, going from the unconstrained Core 60, inflation sensitive, and Core 80 models. Unconstrained is still up 5.37% year to date. Core 60 is up 1.62%. Inflation sensitive models are up 2.2%, and Core 80 is up 1.95%.
Take us back to last year. So if folks were in these portfolios last year, and I know it's important for you to say that past performance is not indicative of future results, but it was a pretty bang-up year last year after fees. An average fee of, say, 1% for most clients, some a little higher, maybe some a little lower, depending on the size of the portfolio.
So this one, I pulled up a quick one, but this is pulling up a little bit of the yield or return that we're getting in this year. So this is from January 10th, 2025 to January 9th, 2026, just a year look back. Unconstrained's up 63.87% over that time period. The Core 60, which is a 60-40 split, so taking theoretically 40% less risk in the overall market, is up 18.48%, 18.5%. Inflation sensitive up 16.94%, where we saw a big spike in that was really around quarter four last year. People having fear of the market, AI trade, their deals going on. So we saw a big uptake in gold and silver. And then Core 80 model, our 80-20 split, 22.91% for last year. And the S&P last year finished off about 18%, I believe. Pull that up.
So as we were talking last year, and clients that were talking with us in year-end planning, we were skeptical. Last quarter we had a little bit of skepticism going into the new year. But with what took place with the Trump administration and military action in Venezuela, and then some of the news that the Trump administration put out, and things we're going to talk about here in a few minutes, would you say that we're leaning more bullish?
Yeah, I'm definitely bullish for 2026, especially I think energy could see a pretty decent year this year. Trump's already had a U.S.-backed investment that he's proposed of $100 billion for Venezuela's oil, bringing that, and announced a transfer of 30 billion barrels of Venezuelan oil to the U.S. energy stocks.
That's
and they've rallied
already taking place.
Yeah,
right?
That's happening.
Yeah.
And then Trump also went on. If you have any dividend models out there that are using defense stocks, I might want to transfer away from those. Trump has told a lot of the defense companies to go ahead and shut off their dividends and refocus.
Stop buying back their shares. Yep. Focus
Capital
dividends now. Put that back into defense growth.
Yep, defense growth, because in 2027 he wants to up the defense spending up to from $1 trillion to $1.5 trillion, so another half $1 trillion.
Yeah, it's insane. But the market responded to that the following day on the news that saying we want you to pull back on those. A lot of companies sold off those dividend paying stocks.
Yep.
A lot of institutions, individual investors sold off those stocks. But then what happened after that news is the Trump administration said, hey, actually what we mean by this is that
buy
them because we're going to put more money into defense spending, which will drive up share price.
Yep.
Theoretically.
And then on top of that, the Trump administration also announced plans to halt institutional buying of single-family homes. So what they're going to do is direct $200 billion in mortgage purchases through Fannie Mae and Freddie Mac.
Fannie Mae. I don't necessarily, in this personal opinion, I don't disagree with that action. And reason being is that institutions can come in and bully the individual consumer.
They have a way larger bankroll.
Right. And so, that almost creates some market manipulation in that area. So I'm encouraged to see the president come in and make that call.
Another thing I'm interested on, kind of transitioning away from housing, is Trump wants to limit credit card caps to 10% on credit companies. I would love to see how the financial sector responds to that.
My opinion? They're going to react negatively to that. I get the sentiment. I understand what he's trying to do, which is help the American borrower reduce some of their liability and cost and get ahead of their consumer debt payments.
If you're lowering the interest rate, in my opinion, I feel like the creditors are going to be like, okay, if you're going to lower that, in turn, they're going to be like, we're going to lower the credit that you can take from us.
So your access to credit, we're going to reduce.
Yep.
Right. They kind of go hand in hand.
Which could limit spending, because if you don't have a bigger credit bill or a credit line, you can't go ahead and spend and pump it back into the economy. But again, Dalio brings it up a lot. You have these huge cycles of credit. A person gets credit, he spends it, he maxes it, another person's debts, another person's income. So there's a whole bunch of different economic factors that can play out inside of just that one proposed plan of action that he wants to put out.
For our client base who's going to be listening and maybe asking us questions and saying, well, Kenny, Isaiah, how do you formulate a plan and a strategy around this? The overwhelming majority of our clients have little to no consumer debt. That's the good news.
Yep.
Now, moving forward to your point with, how will this affect the overall economy? I think you're hitting spot on. I think credit limits are going to drop if we put a fix on interest rates.
Yep.
I think you have to allow capital markets to do what they're going to do. I think you have to allow the ability for big business to operate efficiently. Now, obviously, taking advantage of people doing unscrupulous or illegal activities to manipulate a consumer, all about fair trade.
Yep.
But when you limit the amount of interest that you can charge a borrower, and most people in today's world, they're borrowing more than their income allows for.
That's what I was just going to point out. Wages have not kept up with inflation. So if you limit a credit card company or a credit company to 10% is the rate that they're going to charge, well, they're going to be like, okay, if you want to borrow, even all the way down to mortgage companies, if you want to borrow $500,000 to go buy a house and you want to do zero down, how much income are you going to have to prove to be able to show that? And he's more or less aiming this more at credit card interest rates.
Yeah.
But I think it could have a trickle effect into other sectors of the economy as well.
Well, most of these lenders lend beyond just one source.
Yep.
It's not just consumer credit. A lot of them are also mortgage lenders, car lenders. So credit back and full faith and credit based on your income, based on your ability to pay is one form of lending. But asset back. So if you own an asset, they'll lend because they've got something.
A lien on your asset that you own.
Exactly. So more to come on that. I think it's going to be interesting to see how policymakers and financial institutions come together to come up with a plan and a strategy to help the American consumer. Look, the federal government in and of itself is in the same bucket of the consumers it's trying to protect.
Mm-hmm.
I mean, we have $37 trillion of debt, and we don't take in enough money. And as the years go by 2034, statistics say that 94% of our expenditures will go for the national interest on our debt.
Mm-hmm.
So practice what you preach, government.
Yeah.
If you're going to go after the individual consumer, how about manage the way you spend?
Yeah. And that goes in with other geopolitical events. Like I've read tons of articles on the kind of stance that Europe's taking. If Trump said in one of the press conferences he held at the White House, he said we could take Greenland the easy way or the hard way. And I don't necessarily know what he exactly means. I think he speaks in code a lot when he talks. So when he says take it the hard way, I think Europe kind of took a stance of if you're going to use military action to take Greenland, we're going to call our debt back in. And that could have a major economic consequence on the U.S. So there's a bunch of things going on. Do I necessarily think that the U.S. is going to invade Greenland? I don't think we're going to use military action to invade Greenland, but
it's 57,000 people who populate Greenland. However, I think the federal government, the U.S. government, needs to do something because when we look at the actions that Russia's taken, when you look at the actions that the Chinese are threatening to take against Taiwan. I think from a hemisphere point of view, I could see where the Trump administration is saying, well, look, we'll take and guard the Western Hemisphere from Greenland down to South America. That's our baby. Mm-hmm. Russia, you got the northeastern part of the world. Enjoy the frozen tundra, the Serbian whatever. Mm-hmm. China, you've got Asia. Mm-hmm. Don't touch Australia. Don't touch New Zealand. They're our allies, our friends. But if you make trade fair in those regions, you can have Taiwan. Your empirical rule over Japan, that's probably a non-starter.
Yeah, it's almost
not
like
happen.
It is truly the changing of a world order, and countries in and of itself. If you look back through history, there's always been these world dominant superpowers, and people have shied away from, and especially in like the technological age of imperialism. Like you're literally seeing it firsthand of what imperialistic national governments do. They go out. They capture, they take, and it's not always a Viking raid where it's nasty, brutal, but there is could be. I mean, look at Russia and Ukraine, same type of ordeal, but you can see a political landscape of, hey, we'll help you do this, but we want all these resources, basically holding it that's titled in our name.
So when it comes back, every person that's listened to our commentary and the things that we've talked about on our show, Market Talk Mondays, the D word comes up.
Diversification. And I know we said diversify a little bit to inflation-sensitive models from AI, but AI's kind of held a little strong going through the fourth quarter last year. They took a little beating, but it kind of came back. NVIDIA announced a new chip called its Rubin chip, which is taking multiple other chips. You got to get Jacob out here talking about this because I don't know too much of the specs and whatever is going on inside the chips. But from what I've read, they're going to take this chip and it's going to make processing times X amount faster, and it's going to be able to build strong, realistic AI using and cutting costs in the sense of using a chip that's what NVIDIA is trying to do. They're trying to make the most powerful chip for the cheapest amount possible so they can sell it to all the other companies.
Still need power, though. Still need energy, hence Venezuela. So our grid has got to, the grid inside the U.S., from what I've read and folks that are in that energy space, we are 50 to 80 years, depending on who you talk to, behind the 8 ball. So our infrastructure has to improve, which means investment from these companies that have rested on their laurels for years.
Hence what Meta is doing, securing energy contracts with Vistra and Oklo.
So talk about Oklo a little bit. Tell us about what's going on there.
Oklo is a nuclear energy company, very speculative investment. Like today it's down 3%, but year to date I think it was up 33%, and that's January 1st to January 11th, 12th. So that's a huge deal. It's just like
that's a stock inside the unconstrained portfolio?
Inside our unconstrained model.
Okay.
Not giving too much else what else is out there, but that one is in it.
Yeah, so that one, nuclear fusion. So they're on the cusp of new developments, new strategies, and Meta's got interest in them.
They secured it. So that could prop up a little bit of their earnings. So
they also bought a company, Vistra. Is that in the portfolio?
No.
Okay. So, you know anything about Vistra? Have you?
Not off the top of my head. I haven't done too much research on them. I'll look into it, and I'll contact some of the teammates that I have, and we'll talk about it and see what's going on with them. And then I know last year our yield curve was inverted. It's now flattened. So the 2-year yield is up 6 basis points to 3.54%, and the 10-year yield is at negative 2 basis points to 4.17. And just a quick clarification on how yield curve works. A regular yield curve, the shorter the time strain of the debt that you're buying, the interest should be a little bit lower because it's in the short term than the long yield. So if you buy a 30-year bond, that yield should be greater because you're taking more risk with those dollars because you don't really know what's going on in the
long term.
And
you're holding it for a long term, and you're being rewarded. To hold it for a longer period. Okay. Short term yield should be lower in a normal yield environment. And what has happened is short term rates have been more desirable than long term rates because they've been higher. Right.
Absolutely.
And so we need to see that come back into a normal basis, normal curve, and not inverted where short term yields are.
And it comes to with what happens in the future, and if people have a positive outlook on the U.S. economy in the next 20 to 30 years, that's what's going to drive those longer term yields to be higher. And then they don't really know what's going on, and when there's a negative yield curve, so they buy shorter term yields, and that's what really props up those yields.
And going back to the early part of the show with things going on with Chairman Powell and the potential of him being indicted. We've seen gold and silver this morning ramp up. Is that anywhere in the portfolios?
And like I said before in the beginning, our inflation-sensitive model picks up kind of that yield appreciation on gold. I said yield instead of gold. My head was moving a little too fast. And silver. And it has a little bit of Bitcoin exposure in there as well. But Bitcoin's kind of been, in my opinion, a little stagnant. It's been sitting around 90 to 88,000 for quite some time. So interested to see what the U.S. government is going to continue to do inside the crypto space.
Well, that's why we're seeing some risk aversion is that investors are unclear with policy direction. They're unclear with geopolitical worries. And so flight to safety is always on the minds of those who are starting to be concerned about markets and owning equities in that environment. Moving forward through the years, is there anything you or the advisory team's going to do with portfolios as it relates to geopolitical unrest?
Yeah.
I guess there could be a position of maybe moving towards defense stocks again.
Yeah, defense stocks I think would be huge, especially having some sort of aerospace exposure. I think a lot of the defense structure moving forward. I know we have the Golden Fleet coming, so they're working on that in the Navy. But I think again, air superiority is top tier.
We can see what happened in
Venezuela.
In Venezuela, now the talks that have come out with energy weapons that were used to
so that
destabilize, demobilize troops.
They haven't approved or basically cited that as truth yet. Is that interview true yet? But I've seen a lot of people have been releasing that interview with that Venezuelan security guard talking about the speed and the precision.
Well, the White House posted it.
White House posted it. So now it's true.
Or they at least reposted, the talk of that. So, yeah, those weapons are out there, which again, if we think about it from a technology point of view, from an investor point of view, it's the wave of what we see coming next and how countries will defend their interest.
And that kind of interview goes to prove where I get my confidence from and the full faith and credit of the United States of America, that no matter what goes on, we can move with speed, precision, and if we want something, we can get it. And I think it shows our peers. There's two instances where I think it shows our peers that and foreign adversaries to kind of lay off of us a little bit. First was, and this is not taking a political stance or saying this was Donald Trump versus Joe Biden. This is non-political, but the strength of our military. To be able to fly across the world, get into a foreign airspace, drop a 40,000-pound bomb, get out with basically didn't know we were there until we dropped the bomb.
Yeah.
Then you go to Venezuela and you have helicopters flying over and they had no idea when our troops hit the ground. And then to hear another foreign adversary say they shot with speed and precision, sounded like 300 rounds a minute with 20 guys, that's pretty crazy.
Yeah.
That's pretty crazy. And that shows the strength of the United States. And I think a lot of our foreign adversaries trying to refigure their minds a little bit of.
Yeah. Yeah, the acronym is FAFO. F around and find out. So Maduro kind of called it on himself, didn't he?
He said, "Come and get me."
Yeah. So I don't think whether you love him or hate him, I don't think President Trump is a guy that you want to play chicken or chess
he
with.
said, "Come and get me." He didn't even get to his safe room.
So as that relates to the overall market, again, folks, when you're thinking about investments is the acceptance of all things risk. Insurance is the transfer of risk. And in our policies and procedures that we use with our clients and the strategies that we deploy, it's bringing together both of those in a actuarial science modality, a way to think about how do we transfer risk. We use insurance products to do that. When you think about accepting risk, investment products. So bringing those two together in a harmonious way where we can make sure that clients of our firm have income and that we can make the income last for at least 2 lifetimes.
It's figuring
and
out,
provide a legacy.
It's figuring out the balance of having safe income and safe strategies for our client base is typically older. So how can they have safe income and safe strategies but invest like a young man?
That's right.
That's what we're trying to figure out and how to do that, where they can have the speculative exposure and have the NVIDIAs and all of the Oklos and all of those positions inside their portfolio, but on a reasonable basis.
Everyone loves sexy, a little bit of sexy, right? Everybody loves to have that stock and that investment they want to talk about and the performance of it. But anything after the but usually stinks. The but here is you have to have a safe place to land. You have to have a safe place for money to continue as if you still have a job in retirement. It's the job of the portfolio to provide income for you in your distribution phase. And if you don't have that solidified, if you don't have that locked down, create a plan that does. give us a call, reach out. And if this stuff is good for you and you're enjoying the commentary, let us know. Hit the like, hit the subscribe button, tell a friend, and we'll see you on the other side. We love you guys. We're thankful for all of you as your clients. We hope all of you have an amazing 2026. We're believing good things for you and good things for 2026. God bless you all.
Go Nittany Lions.
Isaiah throwing out his school alma mater here. So how about go Flames?
Yeah, there you go.
Go Tar Heels.
There you go.
Go Hokies. Am I telling all my teams I love there?
Yeah, there you go. I think we need to lock down Jim Harbaugh. Who was that? Was it Jim or John?
I don't know which
Ravens.
one. They're both
one
great
of them
coaches.
got fired. So
John.
There you go.
There we go.
Hey John, I'll hire you for Penn State head coach.
Call us. All right. Have a great week. See you next week.